Hello students, thanks for clicking this video. With the help of this video, you are going to learn about payment of amount due to the retiring partner. Payment of amount due to the retiring partner, it is the payment. And in our previous video, we discussed very clearly about computation of amount due to the retiring partner. So now firm going to pay to the retiring partner, whether it may be lump sum or installment basis. What is the meaning of lump sum? What is the meaning of lump sum? In one single installment, entire money will be paid by the firm to the retiring partner, that is lump sum, isn't it? At the same time, installment means more than one installments, which is 2 installment or 4 equal installment or 10 equal installments. Our firm will take so many years to settle the money to the retiring partner. This will happen when firm doesn't have sufficient money to pay out its liability to the retiring partner. Firm chosen this second method, installment method, the partner's capital account will be transferred to its loan account, because firm couldn't pay entire money in one single installment to the retiring partner. So firm is transferring that particular partner's account to his loan account. The retiring partner's loan account will be entered in the liability side of the continuing partner's balance sheet. Isn't it? Anyway, they are responsible to pay that money with interest to that particular partner, one who is retiring from the partnership firm. Isn't it? Okay, good. If partner is maintaining debit balance, partner's capital account. Partners may maintain debit balance or credit balance. If partner is maintaining credit balance, firm has to give that money to the partner. If partner is maintaining debit balance, which means partner has to pay money to the partnership firm. In this situation, credit side is less than the debit side, means debit balance, which is debit side is more than the credit side is debit balance. In that situation, that particular partner, one who is retiring from the partnership firm, he or she is liable to pay money to the partnership firm. So journal entry for that is cash or bank account data to partner's capital account. So here partner is paying all the entries we are writing favor for the partnership firm, not for partners, isn't it? But while you prepare partner's capital account, you might have written the journal entries favor for the partners. But now all the entries will made favor for the partnership firm, not favor for the partners. If partner is maintaining debit balance, the journal entry is cash or bank account data to retiring partner's capital account, which means the retiring partner, one who is retiring from the partnership firm, he is responsible to pay money to the firm. So now firm is receiving cash and bank, cash or bank from the retiring partner. So retiring partner's capital account is to be credited, isn't it? At the same time, if retiring partner maintaining credit balance means credit side excess than the debit side of partner's capital account. In this situation, balancing figure we will find out in debit side. So it is called credit balance, which means firm has to pay some amount of money to the retiring partner. Firm has to pay some amount of money to the retiring partner because his contribution for the firm is inevitable. Because of that particular retiring partner, firm earned goodwill. Firm earned a tremendous profit. So many years firm gained ill health or his own idea, whatever it is, he is retiring from the partnership firm. In this situation, firm is responsible to give money to the partner, one who is maintaining credit balance in his capital account. So journal entry for it, if it is credit balance, retiring partner's capital account data to cash account, isn't it? So in firm's book, they will write the money given to retiring partner. So retiring partner's capital account should be debited and cash is given by the partnership firm to the partner. So you don't understand wrongly. In our previous entry, ulta entries we did, because that was favor for the partner, but it is favor for the partnership firm. In firm's point of view, that particular partner's capital account should be debited and money is going out. Anyway, it should be credited. Isn't it? Don't confuse the both. So you must understand the base about it. It is the payment of amount due to the retiring partner. When firm is preparing its payment in installment, it may be agreed among the partners that the amount payable to retiring partner will be paid in installment. So all the partners should accept that. All the partners' assent is very important when firm is taking the decision to pay its liability to the retailing partner in installment basis. When firm will pay in installment basis? Because firm doesn't have sufficient money to pay out to the retailing partner that entire money. So firm is preparing second method called installment method. In such a case, balance in his capital account is transferred to his loan account. Which partner's loan account? The particular one who is retiring from partnership firm, their capital account will be transferred to his loan account, on which interest may or may not be payable. Sometimes interest along with the loan amount will be paid. Principal plus interest amount will be paid by the firm to the partner. Sometimes may not. The principal money alone will be paid by the firm to the partner. And it's shown in liability side of the balance sheet. As I told you already, as soon as created the loan account for particular partner, one who is retiring, immediately that loan account should be transferred to liability side of the balance sheet of the new firm's balance sheet, isn't it? Okay, then of the reconstituted firm, till it is paid, if interest is payable, interest is paid or credited to his loan account on the basis of the amount outstanding in the beginning of the year. The amount of installment may be principal amount plus interest, when they are paying to the retaining partner, principal amount plus interest, or it may be including interest. So principal money plus interest is the first one, or together without splitting it both. So together the firm may be given to the retaining partner. The amount paid is debited to his loan account, and next year interest is allowed on the balance. Next year interest is allowed on the balance. The amount paid is debited to his loan account. The amount paid is debited to his loan account. This much rupees is debited, which means they paid, isn't it? At the same time, and next year interest is allowed on the balance, and next year that interest also will be charged. Along with interest, the principal money will be paid by the partnership firm to the partners. So this you will understand after working out some illustrations. For your better understanding, I have some illustration. I will show you some illustration after a few minutes. If firm doesn't have sufficient amount to pay to the retaining partner, firm is preparing partner's loan account, especially retaining partner's loan account. In that situation, retaining partner's capital account should be transferred to retaining partner's loan account. You know about it. So if amount is transferred to retaining partner's loan account, what is the journal entry? Retaining partner's capital account should be debited and retaining partner's loan account should be credited. Look at this. Retaining partner's capital account debtor to retaining partner's loan account, isn't it? So this is the journal entry when firm is preparing installment basis. At the same time, when the entire money is transferred to loan account, especially for retaining partner. Okay. And next one, if firm decided to provide some interest on the loan amount, for interest provided, interest on loan, as I told you already, interest account data to retaining partner's loan account, interest on loan. So here itself you can frame the journal entry very easily, interest account data to that retaining partner's loan account. And for payment of installment, if the partnership firm is prepared to pay its liability in installment, retaining partner's loan account to bank account, because the firm has to pay, firm is responsible to pay, and that loan account is entered in the liability side. In this situation, firm has to pay to the retaining partner. So retaining partner's capital account debtor, and the firm is paying money to the retaining partner, isn't it? So easily you can understand journal entry. For your better understanding, I have few illustrations. If the amount of installment is principal plus interest, so they have chosen installment method. So here principal plus interest, the firm is ready to give to the partner, one who is retaining. X, Y and Z were partnerships sharing profits and losses in the ratio of 3:2:1. So it is their existing profit and loss sharing ratio 3:2:1. Z retired from the firm on 1st April 2016. One who is retiring, Z is retiring from the partnership firm. When he is retiring, 1st April 2016. After adjustment, His capital account shows a credit balance of rupees 1 lakh. So in this situation, firm has to give that 1 lakh rupees to the retiring partner, isn't it? Because he is maintaining credit balance in his capital account. On the date of retirement, Z is to be paid by the firm in 4 equal installment, not lump sum basis. So not one installment, it is 4 equal installment from 31st March 2017 onwards, along with the interest 10% per annum. Prepare Z's loan account until he is paid the amount due to him. So they are asking us to prepare the particular partner's loan account also until the entire money is paid to the retiring partner. The firm closes its books on 31st March every year. So accounting and financial year, the firm closes its books on 31st March every year. So now we can discuss the answer. As per the given information, that retiring partner is maintaining 1 lakh rupees in his capital account as credit balance. So that 1 lakh rupees will be transferred to partner's loan account. Then the firm is decided to give 10% interest on 1 lakh rupees. You know that. So 1 lakh rupees is the amount for retiring partner Z's capital account. Firm has to give 1 lakh rupees plus 10% is interest. So 1 lakh into 10 by 100, that is 10,000 rupees. So collectively 1 lakh and 10,000 rupees would be paid by the partnership firm to the retiring partner. So in the first installment, because 4 equal installment they have decided to pay its principal plus interest to the retiring partner. In this situation, 4 equal installment means 1 lakh divided by 4. So how much will come? 1 lakh divided by 4, 25,000 will come, isn't it? 25,000 will come. So first our 25,000 is paid by the firm plus interest amount 10,000. So collectively 35,000 is paid by the firm for the first installment for the first year. It is 31st March 2017. 31st March 2017. Firm is paying this money to the retiring partner, and remaining money will be 75,000, and we are going to calculate 10% for that 75,000. 75,000 is brought forward plus 10% on 75,000 is 7,500 rupees. 7,500 rupees, and collectively 82,500 rupees, isn't it? 82,500 rupees. In that, firm is going to pay another 25,000 plus interest money. So 25,000 plus 7,500. So collectively 32,500 rupees. Firm 32,500 rupees firm is paying to the retiring partner. Then remaining amount will be 50,000. Then 50,000 will be brought forward here, and 10% on 50,000 is 5,000 rupees. Then 5,000 rupees will be added. So collectively 55,000 will be paid by the firm to the retiring partner. So firm is paying 25,000 plus 5,000, that is 30,000 by the firm to the retiring partner. Then remaining 25,000 will be there. So 25,000 will be brought forward over here. Then after that, because fourth equal installment, fourth installment we came now, isn't it? Fourth installment. So in the fourth installment, 10% on 25,000 is equal to 2,500. So 2,500 plus 25,000 is equal to 27,500. This 27,500 money will be entirely paid by the partnership firm, because 25,000 is equal installment plus 2,500 is 10% of its interest. So collectively 27,500 paid by the firm to the partner. Second illustration, and one more illustration I have for you. That is illustration 28. If the amount of installment includes interest, if the amount of installment includes interest, so interest include all together in one payment. X, Y and Z were partners. In a partnership firm, they are sharing profits and losses equally. So their profit and loss sharing ratio is equal. Z retired from the partnership firm after adjustment his capital account shows the credit balance. So here also Z is retiring, at the same time his credit balance is 1 lakh rupees. So Z is maintaining credit balance. In this situation, if the firm is choosing installment method, firm has to transfer the particular partner's capital account to that particular partner's loan account. That loan account will be transferred to reconstituted firm's balance sheet, isn't it? Then after that, the firm should pay in how many equal installments they are going to pay, whether it is principal plus interest method or all together. Okay, we are going to discuss one by one. On the first date of 2017, Z is to be paid 2 equal installments. 2 equal installment only. 37,500 each, including interest 10% per annum on the outstanding balance of each year, and the balance including interest in the third year. The firm have decided to pay its liability in 2 equal installment. That to 37,500 only. 37,500 500. So 37,500 plus 37,500 is not 1 lakh. Collectively 75,000 only will cover, but 10% interest also has to give. So balance money will be there. That balance money will be paid in one single installment. One single installment. So you have to be very careful while you are preparing this account. Only 2 installment. After the 3rd installment in the 3rd year, balance money will be paid. Whatever the money it is, that will be paid by the firm to the retaining partner. Prepare Ijat's loan account till he is paid the amount due to him. Okay, in this method, Ijat's loan account, first of all, Ijat is maintaining one who is retaining from partnership firm. He is having 1 lakh is the credit balance, plus interest on 1 lakh is 10,000 rupees. So collectively 1 lakh and 10,000 rupees. First installment is 37,500 is paid out. Then 37,500 minus 1 lakh is 72,500 rupees. 72,500 rupees. 72,500 into 10%, that is interest money. So 7,250 rupees. So collectively 79,750 rupees. Then 37,500 firm is paying money to the partners, because here they did not split. They didn't split. In the previous problem they splitted, but it is all together in this problem. So 37,500 is paid by the firm to the retaining partner. Remaining amount 42,500. This 42,500 plus interest money 4,225 rupees. So collectively how much it is? 46,475 rupees. So this money entirely will be paid by the firm to the retaining partner in one single installment. If you have any doubt, don't hesitate to ask the doubt. Partial payment to retaining partner. It is payable that at the time of retirement, a part of amount due to the retaining partner is paid and the balance amount is transferred to his loan account. At the time of retirement, as soon as the partner retires from the partnership firm, the firm will give some amount immediately. Then the remaining amount will be transferred to his loan account. So journal entry for it. Journal entry for this. Retaining partner's capital account should be debited, and how much amount immediately given by the firm to the partner is credited, and remaining how much amount should be paid by the firm to the partner is credited. In the future, this amount will be paid principal plus interest method or all together method. So anyway, firm is responsible to pay this amount, balance amount to the retaining partner. So this will be entered in the balance sheet, reconstituted balance sheet, liability side. Reconstituted balance sheet, liability side, this retaining partner's loan account will be entered. For your better understanding, we can go for illustration 29. Annual installment payable at the end of the financial year. X, Y and Z were partners. Illustration 29. Annual installment payable at the end of the financial year. X, Y and Z were partnership sharing profits and losses equally. So X, Y and Z, they are partners in a partnership firm. They are sharing profit and losses equally. Y retired from the firm. One who is retiring from the partnership firm is Y. So Y is retiring from the partnership firm. After adjustments, his capital account shows credit balance of 75,000 rupees. So after adjustments, his capital account shows credit balance. So Y's capital account shows credit balance. In this situation, the firm has to give 75,000 to the retaining partner, isn't it? Because he is maintaining credit balance. You know how it is that a particular partner's retaining partner's capital account should be debited by cash or bank account. So this is the journal entry. The firm has to give that of 75,000 to the retaining partner. On 1st April 2017, Y was paid 15,000. On the next day, when he is retiring, on the next day, the firm is paying 15,000 immediately on retirement. And balance amount is paid in 3 equal annual installments. 3 equal annual installments they are taking to pay remaining amount. So actual amount should be paid 75,000. So 75,000 minus 15,000. Remaining 60,000 will be paid later by the partnership firm to the retaining partner, isn't it? Because that 15,000 immediately paid by the partnership to the retaining partner. Amount 3 equal installments also they are taking to pay this 60,000. 3 equal annual installments. So 3 years they are going to take. At the same time, along with interest 5% on this 60,000 they are ready to give. On this 60,000 they are ready to give 5% interest. Prepare Y's loan account until he is paid the entire amount due to him. So they are asking us to prepare loan account. The firm closes its book on 31st March every year. Firm closes 31st March every year. So they given very clearly here in the solution why is loan account is created, and capital money. You know how much money should be paid to the partner? 75,000 rupees. 75 minus 15,000. So 60,000 should be paid now. That 60,000 is entered in the credit side. It is wise capital account. So wise capital account should be debited in partnership firm's account. That you know very well, right? As per the journal entry wise. So wise capital account 60,000 will be paid with interest 5%. 5% on 60,000 is 3,000 rupees. So collectively 63,000 should be paid by the partnership firm to the retaining partner. In the first year, 2018, March 31st, they are paying money because 3 equal installment. 60,000 divided by 3 is equal to 20,000. 20,000 plus interest 3,000. So collectively 23,000 is paid by the partnership firm to the partner. Remaining money is 40,000 rupees. Then 40,000 plus 5% 2,000, 42,000. Then 20 plus 2 because second installment is 20,000. So 20 plus 2 is interest money 22,000. Remaining is 20,000. Then 20,000 is brought forward here. Then 5% they are calculating on 20,000. That is 1,000 rupees. So 21,000 should be paid. And here 21,000 is paid. 21,000 is paid finally, isn't it? So now I hope you understood about this all 3 illustrations. Based on this, some illustrations also there. Many numerical problems also given in TS Giriwal and your NCERT book also. Don't forget to practice. Thank you.